Hi, this is Jeffrey Kurt, Kurt Financial Group. What I'd like to do today is introduce an investment strategy that I've come up with to help certain clients. So about 3 weeks ago, I was speaking to a client. She's very conservative, basically doing CDs. And she has a CD coming due. We were talking about it, we know what the rates are at and like that. She asked the question, hey, is there anything out there beyond CDs, but I don't want to be in the stock market. I don't want that risk. So I went and spoke to a group that does just fixed income ETFs. I've been dealing with these people for quite a while and went back to them. I knew that they had some resources in terms of models or suggestions to follow. So I worked with them, got their ideas, and I've also tweaked them up a little bit. The concept is that we've developed 3 different model portfolios that end up having more yield or more return, but they do have a little more volatility in terms of the price of the ETF. Not like a stock, but a little bit more. And we've displayed or set up the model and have shared it with some clients on just maybe the best case and worst case of what these portfolios performed as over the last 52 weeks, basically to try to illustrate the price risk of the underlying ETFs. So if anyone's interested, love to share them with you and have a conversation, because I think there's some nuances that I'd like to know more about an individual's particular situation, risk tolerance, return requirements, stuff like that, that before I just release this, that there's more of I get to know and also maybe tweak up. Because I am, for another client who we're going to be working with on the strategy later in the month, we might be combining things and not strictly following the model. And I also envision that this is going to be an actively managed situation, especially at the margin. So again, if there's any interest in that, please call us, email us, text us, whatever it might be. And also, to finish up, if you are a high tax bracket person and the funds you're considering are taxable, we can do this within a municipal or a tax-reduced strategy and approach too. I haven't done the details on that yet, but I know there are ETFs and suggested models for that approach. So I appreciate you listening to this. Please feel free to pass this along to anybody that might be interested. But again, it's a fixed income strategy, much lower return, but again, much lower risk than you would find in other parts of the capital market. Let us know any questions, suggestions, or what you think. Thank you again. Goodbye.